What's up guys, it's Michael here. In this video, we're gonna look at the predictions coming up in the May 2023 inflation report. So this one's actually gonna be a major deal because since the posting of this video, a day later, the next day, June 13, and most likely around June 14 to have the report out on their website, this got to describe whether or not they're gonna raise interest rates or not. Now, why is this very important? As I mentioned in a previous video, this will make or break the economy, whether or not we hit a recession or not. So first, it's meant that they are planning to raise interest rates by 0.25%, so 25 basis points. It is because the economy's inflation cannot be kept under control, and their job right now is to artificially hike interest rates to suppress the economy. So a lot of people predict that either this is where they're gonna begin to pause, or are they going to continue to raise? So based on the data that's giving out right now, majority of people think they're going to pause interest rates currently. And if some people think they're going to drop the interest rates, that is almost a guaranteed no, because based on Jerome Powell, he said he's trying to suppress inflation, and most likely, and he said it's a guarantee that they're not going to drop interest rates in 2023. So here is the kicker. Whether or not they raise or pause interest rates, first, the market expects them to pause. If they don't pause and continue to raise, then everyone's going to flip out, and all those mainstream media is going to add fuel to the fire and start broadcasting this is like the end of America, and this is where you begin the recession. Whether or not that comes true, we're going to find out within a day or two. And I hate to be a kicker, but if you look at this looks similar back in 2008. And this is the time where the most interesting part is where the U.S. economy might take a tumble. And in this case, like I mentioned in a previous video, there's a majority of people became millionaires during this recession or crisis, which in a way it makes sense. Where everyone decides to run, you go in. Where everyone starts to come in, you run away, just as Warren Buffett said. So the interesting part is, because a lot of speculation going on, and majority of people don't watch my videos or other financial YouTubers content that doesn't really like to do fear mongering too much. It's really a few of them, unfortunately, which you guys should click the subscribe button down below and the like button so you can help out this channel. But to get to the point is, you should really pay close attention if you watch this video for the next day or two, because once the report comes out, you got to see a change in the market. And whether you should buy in or not, that will be up to you, depending how you want to spend your revenue. But personally, I like to watch what is going on and see how people react, because people are based on a reaction basis, whether or not the government raise or decrease interest rates. Personally, looking at the given statistics and data, jobs are up, wages is still having inflation wage growth, meaning is, yeah, you try to make more money, but it doesn't matter when everything else costs so much more, like electricity, food, water, gas. I mean, gas actually doesn't have to be super expensive, but that's part of the problem. You make more money, but the other products go up. If the other products cost more, then what is the point? You're back to square one. So in this case, they're trying to artificially raise interest rates, decrease everything down, and based on a report, which obviously for the past couple of months, it's not been looking good. And if that is the case, I personally think if they don't pause, you're either going to pause or they're going to raise. And if they pause, everyone's going to be, oh, what a relief. We're going to hold it there. Personally, if they raise, then everyone's going to flip out. So, take your pill, whatever you want. Personally, I hopefully expect them to raise because currently the economy is still not doing well. And if they pause, yeah, so be it. Decreasing, personally, I say that's not going to happen based on inflation. And fighting inflation, as I mentioned before, you need more productivity. You need to put whatever it's currently that's having a hard time with inflation, put more workforce into there, meaning put more companies and products. So your food is going up, then you need more companies producing goods within that category. Within that category, you look down what else, like what type of food products, and have more people produce those. More people produce those, competition, prices go down. Then you have to artificially raise interest rates. But it's a whole entire story for another subject. So keep this video short. Keep out when I'm posting this video. Keep out for the CPI inflation report and also the core inflation report too. So look at those numbers and take a look at the government website and see how this changes. Besides myself looking at it and mentioning on this video, take a look for yourself. It really gives you a good idea and interest. If you look back all the way back over a decade, around 2008 until now, look how inflation has gone up and down, up and down, up and down. And you keep in mind, during the time with the biggest drops and the biggest rises, that's the time the major amount of people became millionaires. That's it for this video. Hope you guys enjoy. Please like, share, and subscribe, and I'll see you guys soon.